Thanks for joining today's investor conference. At your disposal at any point in time throughout my presentation to ask your questions, or alternatively towards the end or outside when we have a light lunch, we can continue with your better. We are here to announce Q1, the best ever in terms of profitability for the ASPI's history. The trend shows that starting with March, we have seen a very positive trend in terms of top line, in terms of sales, something we already see in April. We are further developing the business, registering a company in Greece to run local business. We kept investing minority investments for us in Theramir. We continue growing the Breezy business in different jurisdictions. And we keep investing into robotics solutions business. On the final dividend, yesterday on the AGM, we decided to pay another $0.25 a share on top of the interim dividend paid back in December of $0.20 a share, lifting the bar to a total of 45 cents a share, translating into about 25 million USD for 2022 profits. Early April, we came to the market with a forecast for 2023. We have been doing that consistently for the last so many years. We believe we could reach a $3.2 billion sales. And most importantly, we expect the net profit after tax to reach in the range between $78 and $82 million. We believe a significant increase upside over 2022 results. About 2.5 thousand employees today, 28 fully fledged in countries. Distribution centers, we added recently another 2, one in Georgia to run Caucasus and further Central Asian business, and one in South Africa to assist with our Africa expansion, especially the south part. On the financials of highlights of Q1, we hit a top line growth of 4%, but as I said, the trend towards March is significant on a year-on-year basis. The gross profit margin is increasing from 7.6 to 8.6%. The gross profit as a number has increased on a year-on-year basis by 17%, leaving us with a net profitability highest ever, as I said earlier, of 17.4 million, an 8% increase from Q1 last year. By product segments, smartphones continue to show a significant increase. For us specific, we are mainly referring to iPhones. The market is overall shrinking on the laptop and overall PC segment by a significant 20 to 30% sometimes this year over last year. We expect we decrease our business by at a much lower percentage than that, meaning we still keep a strong market position and actually improving our market positions in the markets we trade. Processors, overall we are decreasing. We are increasing with AMD. Intel faces a significant increase. seasonality there, so sometimes you see monitors one would expect to go closer to the laptop segment, or the processors or the HDDs, but that's not the case. We are growing on monitors. And as I said, overall the trend on the PC segment is to see another slowdown this year over last year, like we saw last year as well. When it comes to regions, we keep growing the FSU region. We show here an increase of 6%. Much increasing are countries like Kazakhstan, we will see on the slides to follow, is by far number one. But Ukraine is also increasing significantly from last year, and also the growth and the expansion with Apple, and not only in Central Asia markets like Georgia, Uzbekistan, Armenia, Azerbaijan is also giving us this growth on the FSU region. A minor slowdown on Central Eastern Europe by 4%, marginal increase on Middle East, and we see a significant growth in Western Europe. Though we are not fully fledged with subsidiaries in Western Europe, we are growing sales capability, and we have the right franchise with suppliers to grow in Western Europe. More analytical on the income statement for Q1. Top line reaching 72 million, a 4% increase. Most importantly for us is that the gross profit margin kept increasing from 7.6 to 8.6%, leaving us with an operating profit of almost 29 million, noting an increase of 18% on a year-on-year basis. SG&A keeps increasing as a percentage of gross profit, but also given the investments we make in the new businesses. The financing cost, no wonder, keeps going up. We increased to 12% the weighted average cost of debt. We projected all these increases on the interest rates based on US LIBOR, but also Euribor and local currencies. Therefore, our previous statements was we're going to reach and maybe exceed the 12% WACC. But we all see that this is flattening out 6 to 9 months from today, so we expect to see even decreases in the base rates, even starting from this year towards the second half and maybe end of Q3. We ended up, as I said, with 17.4 million, best ever net profitability, further improving the net profit margin from 2.3 to 2.4%, which we consider overall this income statement, these results, to be very satisfactory, given also the times we are in and the ongoing war in Ukraine and the overall trend of slower demand, higher interest rates, less disposable income due to prices and inflation for consumers. But still, we managed to grow both on the top line, but most importantly on net profitability. We see here a trend on revenues by quarter, and right below on the right side we see the gross margin trends. Some seasonality applying, especially for Q4, the highest ever in gross profitability and net profitability quarters. But given Q1 8.6 we've never seen it, as you can see on the slide, which we believe is sustainable at least to a level above 8% for 2023 is sustainable. Now by countries, also explaining the growth in the FSU region. Kazakhstan by far number one. Ukraine is still growing significantly. UAE is number 3. Slovakia is very big. And we have the newcomers out of Central Asia affecting the FSU region numbers: Azerbaijan, Georgia, Armenia. The other thing to note on this slide is that We grow in Poland. We keep our top 10 keeps in the top 10 league in terms of sales, with an almost 19% increase on a year-on-year basis. A bit behind, even given the seasonality on the cash flow, especially cash from operating activities. We still live with higher than usual inventories. That's affecting the cash from operating activities and the cash position, negatively affecting. But we expect, starting with April, we saw a decrease to continue liquidating certain stocks, some of which we are purchased out of the big deal we had in December. And that is expected to further improve cash flows. Yeah, we've done it, obviously. It was not just one supplier, but we've done it to benefit the income statement, but now it's time to improve the cash flow as well. So starting with Q2, we expect to see better generation of cash flows when it comes to operating activities and better cash positions. The debt of the company, we believe, is still at safe level. If I were to include factoring facilities utilization into the debt picture, we are still running with a 0.7 as a ratio of total debt to equity, a quite healthy, we believe. Moving on to some details on the forecast for 2023. We believe, having also seen Q1, at least sales, we believe we should be able to hit a top line ranging between $3 and $3.2 billion compared to 2.7 last year. And most importantly, profitability, we expect it to range between $78 million and $82 million, comparing to an almost $76 million for 2022, which we consider a significant increase on a year-on-year basis, always subject to certain assumptions, certain conditions met. And I remind everyone that the last so many years we announced a forecast, though certain of those conditions have not been met, we still manage to hit the numbers, and usual case is to overachieve the numbers we have forecasted. Dividend, we touched it earlier. Including yesterday's AGM approval to pay the 25 cents. Overall, including the interim 45 cents relating to the results of 2022. We paid about 25 million in cash. The final dividend is expected to be paid early July, as announced yesterday. And we will continue paying dividends according to profitability, according to growth, because we need to finance this up to $500 million extra sales growth in 2023 over 2022. So we will continue paying a significant part of our profits to our shareholders. And just to wrap it up, to summarize, Q1'23 has been the highest ever in terms of profitability. The company continues to pay for 7 years in a row dividends, a significant part of its profits as dividends. We continue developing our business, expanding business to Greece, minor investments in Teramir. We keep signing new contracts and extending franchise to new territories, and we are further developing the Breezy and the robotic solution business. We came out with a financial forecast for 2023 with the numbers I mentioned earlier, and we are adjusting to the new realities. We are adjusting given the changes and the new trends that appeared into the market in the war-affected countries, but I dare say also globally. The company is adapting quickly to the new realities. We are being flexible. We are hedging our risks, and we continue to grow. I think that summarizes our key messages for today. Most welcoming your questions, any questions you may have on those results.
Okay, so maybe I would like to ask a question regarding these inventories. Could you please elaborate a little bit more when we should expect these inventories to go down? Because due to high level of these inventories, you had weak operating cash flow, but also much higher year-on-year financial cost, 40% higher. And so when we should see these inventories going down based on this extra purchases made with Apple in fourth quarter?
It's not only Apple, Jakub. It's a combination of vendors. Already we saw a reduction end of Q1 over end of December. Maybe not a significant one, but a reduction. We will see more reduction by end of Q2 when we announce Q2 results. The big business we had with Apple is expected to flush out by Q4, maybe end of Q3, but I think Q4. And this is expecting to give the opposite to the operating cash flows and cash position. At the same time, I think I said it earlier, that benefited the income statement, though it had a negative effect on the cash flow. But these are business decisions we make on a daily basis. Maybe not a very usual decision, this one, to buy another 150 million extra over and above stock. But we are in business, we value partnerships, we help suppliers, suppliers help us, and that's maybe another reason why we grow so fast when the market is shrinking, yes.
Yes, but on the other hand, you had 100 percentage points improvement in gross profit margin, but only 10 percentage points improvement in net margin, because the weighted cost of interest debt is 12% almost, yes.
There's so much we can do on the base rates.
Yes. Yes, but
base rates
your
are at mid-50s. I've never seen anything like that. I've never seen the US dollar 6 months, say, ranging today between 5.1 and 5.2, yes, with an expectation to hit almost 5.5 in 6 months and then start to flattening out and coming down. Similar, a little bit below, is the Euribor. We've never seen that. So the previous time you asked me, I said we're going to hit 12%. I hit myself. We are hitting 12%. And it also becomes on the mix, because if the biggest country is Kazakhstan, we borrow very expensively in Kazakhstan today, given the increase in the base rates and the spread we pay the banks. You know, it's unavoidable that to run this business for Apple, and not only, you need to run the financing cost. Maybe that's another reason why the gross profit margin is increasing, because some of this cost, financing cost, is absorbed by the customer.
We should expect positive operating cash flow in third quarter or in fourth quarter?
For the standalone or for the 9 months?
For standalone.
For the standalone, we expect positive in Q3 and positive in Q4, and we still expect the year to turn positive. Though we had the same expectation last year, we didn't manage because of the big deal, but we do expect the same to become positive on operating activities on the cash flow side for 2023.
So Q2 shouldn't be positive, cash flow positive?
We expect that we may manage to generate a positive number from operating activities in Q2. Not a significant number, but we are on the right track of, it depends how quickly you liquidate stocks.
Maybe following up Kuba questions, what is the targeted normalized level of rotation of inventories that you target?
Usually we target 37 to 38 days. Now it's higher, obviously higher. So it depends on our success to liquid quickly stocks. That would enable, especially if that turns into cash in Q2, that would create a positive number for Q2, starting Q2.
And regarding only the first quarter standalone, it wasn't inventories that caused this huge negative cash flow, but liabilities.
That's the indirect method. The direct method says you pay negative from operating activities. You receive money from customer, positive. So if you see it in connection, because you buy, it depends. If you didn't pay the supplier on this stock, yes, it's a different story on the indirect method, on the operating activity. So you cannot see on an indirect basis a correct picture. The direct says how much I paid, how much I received. So in these cases, this stock has been paid, money not necessarily received from the customer, and this is causing the negative on the operating activity, not the stock itself or the payment of the supplier itself, combination.
Okay, but still higher purchases wasn't financed by suppliers.
You're right to say. That's why.
In advance.
Agree 100%. So you see, Gregor, now the opposite is happening. You already paid the supplier. The inventory is sitting in the warehouse. The disposal of this inventory and the receipt of cash will bring the opposite result to the operating activity. And this is what we expect to happen starting Q2. We already saw some in Q1, less than what we expected, but hopefully we clear it out by Q3 or Q4 this year.
Do you expect extra profits on this very big inventories?
Yes, that's why we have done it. We have weighted the income statement versus the cash flow, and we favored the income statement at the cost of the cash flow. That's why we have done it. Yes, another reason why the gross profit margin is higher.
Can you say how much of the general costs resulted from your expansion in Q1?
To new business, you're saying? Expansion geographically?
Yeah, the costs for new for opening new countries, new initiatives.
So actually we are creating more infrastructure to run increased turnovers expected for 2023. We are adding people in two new distribution centers, Georgia and South Africa, to help growth in Central Asia and Caucasus on one, and grow business in Africa on the other. At the same time, we are investing more into Breezy and robotics business. I cannot quantify, but significant numbers are expensed, therefore affecting SG&A for this expansion of the company. And at the same time, that also includes the 2 million we have donated, extra 2 million we donated to Ukraine for Q1.
But can we expect that the ratio of sales and general costs will decrease in coming quarters, or will stay at the same level?
I don't expect it to decrease. I expect to see the benefit of those SG&As on the robotics, not in the first half, towards the end of the year, Q3, Q4. But we want the benefit out of that, not to lower the SG&A as an amount. I don't believe that will happen in the next quarters to follow.
But have you already achieved the targeted level of OPEX investments in robotics and in new markets, or it is still in the
Still something more to go, but the major part is already sitting there on the SG&As. Because you cannot continue investing without seeing the reward, the outcome. And if the outcome doesn't come, of course, we expect to see adjustments, yes.
And regarding African markets, because you are investing in the new markets, especially African, but as we saw in the first quarter, structure of revenues, it was flat. About 1% growth only on the African markets. When do you expect that these investments will pay off with higher revenues?
The MEA region mainly includes North Africa, that we are conducting business with Morocco, Tunisia, Algeria, Egypt for the last 20 years. Very little has gone to Africa because we are still in the establishment of distribution center, hiring people, putting salespeople on the ground in many countries, acquiring the customer using the name Aspis in South Africa and expanding not only to the country South Africa but all the South African countries. So we are at that stage. We didn't start loading on at least on sales yet.
Okay, and have you considered carving out the new segment of these new markets just for us to see how is it developing? Because you're right that perhaps we are losing the dynamics because of your standard historical markets, which probably are much bigger than the new market that you.
You're right to say on one side, on the other you're opening the door to the future, yes.
Yes, but I just suggesting
Yes.
carving out new segment in the presentations. Just
To cut
for
out
us.
which segments, for example? Africa?
African new markets.
Yes, if it starts developing, Gregor, maybe at the first stage, no, because it will be little numbers, but as the region grows bigger, we may decide if the growth is so and the numbers are so big to break the MEA into ME, say, and A. Yeah? But I think we are far away from there yet, at least 2023 years.
I have a question regarding
Please.
Imports from Kazakhstan, possible, say,
Yes.
imports from Kazakhstan or other countries in this region
Yes.
to Russia. And
Yes.
I know that you don't sell to Russia and you have this limitations. But can you say if you have any numbers, how much of your sales is going to Russia, let's say through the customers or just people going through the border and buying stuff from Aspis, and can it be limited in the nearest future, let's say?
We don't have exact numbers of what is cross-selling to Russia from customers or customers of our customers. What we know is that we are dealing with technology companies. Therefore, a company like Apple, by the way, we have never been distributor of Apple in Russia, yes? But Apple is a technology company that tracks activations. They know, they have all the technological means to know what product of theirs with what serial number sold to which customer ended up activating in Russia. So this information is possible to obtain. At least the suppliers have that. By practice, I can tell you that we are only growing on the distribution side because a lot of vendors shrinking the customer base are choosing us to be the master distributor in a lot of countries. We have never been punished or defranchised by any supplier, though a lot of competitors have been defranchised by suppliers, meaning they have been cross-selling significant volumes to Russia. It's not any product, what I want to stress, it's technology product, and technology product can be tracked. So outside the proof that we are being very careful, we are signing specific letters with all suppliers. We are watched by the banks who are also run their checks by especially US intermediary banks. And they know that we don't do anything that is outside the regulation and the sanctions. So we have multiple checks on what we do and what we don't do. And I repeat, technology. It's different than selling any other commodity.
You still can activate your iPhone, let's say, in Russia, yes? Is it possible?
A Russian can fly to Georgia, can fly to Uzbekistan, Kazakhstan, buy an iPhone and go back home and activate the product.
Okay. And the volume is unknown for you, let's say.
For us, it's unknown. I'm sure Apple and a lot of other vendors know the activation and know by serial numbers where the product is located. I think it's under control by suppliers and by the banks. They know what and what not, yes. Having said that, I think that's the last piece for Russia. We announced July last year that we sold Must. Must was historically carrying HDDs, PCs, SSDs, CPUs, servers, all of which have been sanctioned. Therefore, we sold the company last year. And we are aiming to sell Aspis Moscow as well, the second subsidiary. But we didn't want to suffer, these stocks we had and leave it to the country and then fly out. We wanted to liquid stocks, decrease exposures, and then we do it. And we expect that to happen this year, hopefully sooner than later. But at the same time, you see, we don't stay with tight hands. We grow elsewhere. We grow in Western Europe. We grow in Central Asia. We are about to grow in Africa to replace this lost business to other jurisdictions.
But as far as I can understand that the main part of the growth is due to the franchising the other suppliers in these markets, yes? So that's why you grow so fast in this region.
When it comes to suppliers like Apple, they go hand in hand with us to explore different markets. We are franchised in 11 countries, including Ukraine. We have been doing this slowly. Once they, not us, we have never been in Russia, I said, with Apple. Once they've lost Russia, they go faster on other Central Asian countries. That's why we grow. And we are the sole distributor. It's not because we are winning the other one or the other two distributors in the countries. It's only us. The channel for iPhone is the main telecom. The smaller the telecoms buy from us, the main franchise distributor. That's why we grow. And we don't only grow with Apple, of course, but Apple is a big growth. Yes.
As I remember, your sales to Kazakhstan increased last year 378 times.
Not to Kazakhstan. Not to Kazakhstan. Kazakhstan has been big for a lot of years. Maybe smaller, the Central Asian country, yes, but not Kazakhstan. No, we have it on the slide with countries.
Yes.
Here, from 125 to 175, Kazakhstan. So 50 over 125, 40%.
Do you see prospects for extending the cooperation with Aspis for new markets?
Yes.
Where and when?
When we are ready, we want to tell you. We are in discussions. Possible, yes. But the first possibility is to further explore the other Central Asian countries, Georgia, Azerbaijan, Armenia, Uzbekistan. We are franchised in all these countries, and the growth recently has been very small. Now we want to grow quickly, and Apple wants to grow quickly. And we still have the Turkmenistan and the other Central Asian countries. We cross-sell to these countries, but not with full infrastructure, and we have a big potential there to grow.
You don't have any shops in Uzbekistan yet, do you?
Uzbekistan, not. But we plan to. It's in the plans.
Is it the plans for this year or
Premium stores.
24?
Maybe this year as well.
First just one shop in Tashkent and then maybe others.
Yes, yes. And I will check because I think maybe we already have one in Tashkent and another one is coming. The second one is coming. Yes.
Can I understand correctly that the first quarter management costs were burdened with the extra donation?
Yes. It's sitting in SG&A costs, 2 million.
So next quarters should be at a similar level without this 2 million? Or
We don't have approval to proceed further than 2 million. 2 million we spent last year, the whole 2022, and now we spend in Q1. So we need the board decision to go further. Today we don't have any further decision to invest another 2 million in Q2 or.
so if the management costs will stay flat, the cost will be like 2 million less.
Yes.
Is there a risk that Apple will add on another supplier in the Central Asia markets?
I think they are very happy with us.
Okay.
We grow very significantly with them and they are very happy. That's why they are exploring quickly the other Central Asian franchise for us as a sole distributor countries. And we are discussing some additional countries.
Say in Poland, can you say how many distribution companies do they have?
They have different distributors. They have for premium reseller stores. They have distribution. I think they have 2.
In here?
Yes. But they are very loyal to their distributors.
Okay.
They don't go bother other distributors that they are happy with. They bother distributors that they are not happy with because it's not the contract. It's the delivery of the numbers that keeps you going with Apple, yes. Not only with Apple, with any supplier. They give you targets. You achieve the targets and overachieve the targets. They don't look for a second distributor because they want to have a certain market share in that specific market. You achieve that, they don't need a second distributor. And they don't think of defranchising long-standing, well-producing numbers distributors. They don't do that.
So this risk is very low?
To my eyes, very low, yes.
Okay.
Yes. We are hitting the numbers they are giving us. And you see, a lot of vendors don't grow globally, but in our emerging markets where we trade, they grow. So the focus is on us, on companies like us in emerging markets to grow.
Could you please explain the key factors standing behind changes in sales mix? Because on the one hand, we saw dynamic growth of smartphones, but all other major lines decreased double digits.
Not all. If I were to split processors, AMD significantly increased year on year. Intel went down on the CPU segment. Yes,
Yeah,
but overall,
all CPUs went down 20%, yes.
agree. And when the overall, I mean, these two make up for 85-90% of the CPU market, they are losing 30%. We lost 20%. That's why I said earlier that overall we are improving our market share on that specific segment in the markets we trade. And this will not continue forever. Consumer demand is slowing down because of all the things we said earlier, inflation, high interest rates. Therefore, the disposable income of consumer is shrinking, but this will not continue forever. They will not wait forever to change their PCs, yes.
Okay. And do you expect similar changes in sales mix also in second quarter?
Similar, but not necessarily you will see display with so big of increase. That's depends on how staffed the market, the channel is on specific product, yes.
Okay. And how these changes affects your gross profit margin? Because in the first quarter we had still in the base Russia, which diluted the gross profit margin, but in the second quarter it should be more or less comparable. And these changes in sales mix, how should affect the gross profit margin year-on-year?
You know, we never expected to see 8.6 in Q1, but that's there. And that also reflects, I said earlier, the fact that we are paying a higher the interest cost, part of which is transferred to the customers through a higher sales price, yes. So we are still happy with the 8.6 we see. And we believe that maybe we don't get in the slowest ever profitability quarter Q2. We don't expect to see the same 8.6. But overall for the year, I said we expect to see above 8, which is very satisfactory, given the times, yes. So running a model with 8% for 2023 gross profit margin, I think it's reasonable.
Okay, thank you.
Can you tell that Breezy is an important part of the business? How much margin does it add up?
We are still putting infrastructure for Breezy because if you see market research on the second-hand product, especially on Apple and Samsung, not only Apple, it's huge. It's multi-billion business
Okay.
with very healthy margins. You know, somebody buying a previous version of iPhone for $300 or $350 is a good bargain. And that's how Apple approached, I think, the market, by not lowering price on one side, on the other side supporting the second hand. Therefore, undoubtedly the future is there. That's why we want to invest into this breezy that still doesn't have significant numbers. But before we grow significantly into this, we need to make sure that the infrastructure is there, the right software is there, the right equipment is there to assess grading of the product.
But the infrastructure, what is it like, the production line, let's say? For
Softwares,
Mhm.
machines to grade the product. Because if you're selling to a corporate, say, client, and say in 2 years' time I have an agreement to buy back with X grading of I will grade the product, and grade B I give you between this and this, grade C I give you between this and this.
Okay.
You need to be ready. If you're not ready, you may suffer significant losses.
Okay.
So you could run the business and go volume business today because we are Apple distributor. They help us do the second-hand product business.
How long does it take, to let's say, refresh an iPhone? How can we imagine that? I don't know if a guy is just, taking every single iPhone and changing it, I don't know, change the screen. How does it look in practice, let's say?
I'm not an expert into this, but I know you need the right software, and you need the right people, and you need the right trainings to do that.
Okay.
So because we see that it's multi-billion business, it can become a multi-billion business. I repeat, we need to be ready. I can refer you to details if you want to the right people to explain to you, but grading a product is not so obvious. If it's not C and it's B and you want to make it an A and somebody would pay you some money to become from C to A, you need to name a price, and you don't grade it well, you're going to lose money, yeah? So
Is it not time consuming?
it is.
It is.
It is time consuming.
But still, you think it can grow, so it's not a niche, let's say.
If you see the acquisitions happen in this sphere,
Mhm.
Amazon, for example, bought a very big, large Indian company into the second-hand business. We are talking about multi-billion market cap business
Mhm.
already.
Okay.
It's big. It's big already. I don't dream that it will become big. The question is, if you are to grab something out of this big market that is aimed to grow much bigger, you need to be ready. And these people, they could build their own stuff, but they didn't. They went through acquisitions. Same with American companies buying mainly in India. Companies that are good at this, specialize into this.
And for these days, how much margin does it? I don't know if it's specified in the report.
Double digit, obviously.
Mhm.
Nobody would get into this hustle without 12 to 15%.
Mhm.
And this is something that is driven by suppliers like Samsung and Apple, because that goes into the green announcements, ESG, the recycling efforts
Okay.
to keep the environment clean, etc. So they push for it and they pay money for it. That's why we have all the assistance from Apple to get there. And who is going to do the iPhone second hand in the countries where we trade and where we franchise? Us. So it's already business waiting for us there. But we can do it elsewhere as well with the assistance of Apple, and not only, yes, because we are an Apple distributor.
And who is a provider of your provider of these used smartphones? Individuals, telecoms, producers,
Open market,
open market. So it mix.
it's a mix. And through own channels.
And what is the most important channel?
The retail channel is one, depending on the markets. We have some from resellers, we have some from the open market. Telecoms, the big telecoms usually do it on their own through their own third parties, but we could become one of those. And telecoms are not our customers, especially the big ones in the countries, Kazakhstan, Ukraine, etc. Usually the smaller telecoms buy from us. They don't want to buy from their competition.
Could
Could you share more information about the sale of own brands? Has the share of those products increased in your revenue?
As a percentage to revenue, it did an increase about 3%. The ranges between 3 and 3.5%. Not because they are not doing well, but because the rest of the lines, especially Apple, is growing faster than the own brands. So we expect growth in 2023, but as a percentage to much increased revenues, we expect it to stay at the same level, close to 3%.
And in which markets is the share the highest?
Everywhere. Everywhere. In the past, we had a lot of business. Most of the business, 30 to 40%, was Russia. But we don't send any more product to Russia, just trying to liquidate existing stocks.
How is it going? How much of stocks is still in Russia?
Significant part has been liquidated. We have about 12 million today, 11, 12 million today, and we are disposing that. And as I said, the sooner the better. We dispose everything, and we can then proceed with the disposal of the subsidiary itself, Aspis Moscow.
A question about gross margin. So what are the risks for the margins? You know, said a lot about better mix or this selling of this additional supplies you have. But what are the risks that, for example, the gross margin could be lower than 80%?
I wouldn't say competition on the Apple side by the other distis because we are the sole disti. The margin also has to do with a lot of things. It has to do with the pricing by Apple to Euro customers and dollar customers. We are a dollar customer. As we speak, we are favored because of the dollar pricing. Different times we are disadvantaged, but now we are in the advantage stage. As I said, some of the unprecedented financing cost that you can see below the line we transfer to customers. Another reason why the margin is higher, yes. And also the product mix, I think you said it earlier. Our focus is to sell higher the margin products, not to increase sales at the expense of the gross profit margin. So it depends on the mix. And with Apple, we try to sell the other products, not only the iPhone, because usually they come out with higher the gross profit margin.
Do you expect to increase the dividend according to inflation rate?
The question, which inflation? We prefer Polish.
What's the inflation in Poland?
14,4 official.
I know we adjusted salaries due to inflation. I didn't know we need to adjust the dividend. But I hear you. And as we grow bigger in profitability, you see we are managing to pay more. But always when we see that we can manage the growth, we can manage the CapEx, because recently we had a lot of CapEx to put infrastructure in Georgia. We grew Czech Republic double. We are growing now South Africa, establishment, distribution center. That needs investments, CapEx. But if we reach these numbers for 2023 on the forecast, we should be able to pay more, I think. Again, depending on what the vendors expect us to deliver as additional sales in the year after. So it's a chain. I think the 45 cents for 2022, 25 million, is not a bad number.
It's for sure the record dividend, but if we consider consider it in respect of payout ratio, it's about 30%. So I remember that you are targeting 30 to 50% of dividend payout.
Up to 50, we said, yes, up to 50. But now we see we move from 2.7 to hopefully 3.1, 3.2, yeah. So if we reach 3.2, that's $500 million extra, you know, you need to finance that. And it's easy to say to the banks, you give me another 50 to 100 million versus why don't you keep your own and then I make the difference, you know. So if you finance to pay dividends, the banks don't like that, as you know, yeah.
Of course, perhaps it will be eager to borrow you money, but 12%.
It's cheaper, especially on the hard currency, even dollar today, 7.5, 8%.
Could you elaborate a little bit on the US dollar has been very volatile lately, and how does it impact your margins and the markets you operate?
All the income statement is affected by this because we are consolidating under the parent company dollar, yes? So it depends on the exchange rates of the countries we trade, the zloty, the hryvnia, the Kazakhstan tenge, the euro pegged, the non-euro pegged, you know, into the dollar. If it's an overall statement, the dollar will stay dollar, no effect. But the rest, if the euro is appreciating, just to take a significant currency outside dollar, yeah, and you pay euro salaries to countries, you increase your expenses. Although you pay the same euro, you increase your dollar expenses. And we are reporting dollar, yes? At the same time, you see higher the gross profit because you're translating a stronger euro profit, gross profit, sales, gross profit into dollar. So you have multiple the effect. The euro dollar, I said earlier with Apple, they have two type of customers in EMEA. Euro billing, dollar billing. We are dollar billing. Today we are advantaged over the euro customers. So it's a lot of factors behind. To the extent you borrow dollar, it's damn expensive, yes. Much higher than the Euribor. Still both of them much lower than what we pay today as a base rate in Kazakhstan, Ukraine, and these countries. Much lower. We pay there 22, 23%, 27% in Ukraine, up to 26, 27% in Ukraine.
So weakening dollar is not generally a danger for your margins. So we understand this.
A what in dollar? Weakening.
Dollar against main currencies, especially, for example, against zloty. Is that the danger for your margins?
Look, when it comes to Poland, for example, and a lot of other subsidiaries we have in Central Eastern Europe, we hedge. So it doesn't matter what happens to the dollar over the local currency because we are hedging almost fully. And we hedge mainly by natural hedging, by borrowing. When we borrow in Poland, we borrow in zloty. We don't borrow in dollar because it's cheaper. Why? Because we outweigh the effect of a possible zloty depreciation to the dollar. That drives higher the financing cost, but that's the business we are in. Yes. We are hedging. We are paying a hedging cost, and that's it. The dollar weakens to the zloty, opposite.
It's neutral.
Thank you for your questions. We have more time outside. Join us for